How's it going, guys? Welcome back. In today's video I'm going to show you a very simple but very powerful strategy that you can use predominantly more during London session. Now what this strategy is based on is it's based on the manipulation of Asia session. So what we're going to do is you can use pretty much any time frame to look at your Asia session. So for me, I'll just stick on the 15-minute, and then once we get a take of the Asia session, we will then drop down onto the 5-minute to look then for our entries. And the entries that we're going to be using is a fair value gap entry and a minimum risk to reward of a 1 to 3. So kind of what we're looking at, right, is we're looking at Asia session. So Asia session usually will be sort of a range and it will be accumulating, and then what will happen is we will then get a take of Asia session, and then immediately after this what we will look for is we will look for it to go to the opposite direction and take the, so if it takes the Asian range high, what will happen, majority of the time, so around 70 to 80% of the time, if you go back over, the last 1 year to 2 years, over a large sample size, what you will notice is we will get a take of one side of the Asia range, and then price will then go and look to seek out the opposite side. And then what we can do is we can then look for trades once we get a take of the Asia range high, for example. We can then look for short positions to take the price down towards the opposite side of Asia range. So this is kind of what we've got, right? So what we're looking at is we're looking at Asia range. Once we get a take of Asia range, we can then look for a sort of pattern like this. We get a market structure shift, return to fair value gap, and then we can look to trade towards the downside. So the timings that we're looking for Asia range is, if I just bring up this right here. So my timings for Asia range is 1 AM till 5 AM UK time. So 5 AM. So this would be our Asia range time. So if you go and you bring up FX market sessions, get market sessions, and then just mark out your Asia range. As you can see, if we come down 1 AM till 5 AM, that's our Asia range. So that's pretty much all you need for the start of the strategy. You can then drop down onto a 5-minute, look for this market structure shift right here. You'll have sort of a fair value gap somewhere above here, and then we can look to take an entry toward the downside. The 5-minute time frame is a really good time frame to trade the strategy. You can look then for sort of a 1 to 3, and with the strike rate of this strategy and taking a 1 to 3 on pretty much all trades, it is a very powerful strategy if you trade it in the correct manner. So what we can do now is we can go onto the charts. We can take sort of a look at a couple of examples. So if we come down right here, so if I just delete this, if we come down and we just kind of look, right, so what have we done here? We've taken Asia range low, and then we've looked to seek Asia range high. Again, right here, we take Asia range low, and then we look to seek out Asia range high. Again, right here, what we've got is we've got a take of Asia range low. We then look to take out Asia range high. And what you can do is you can go back and look pretty much as far as you want. Again, what happens here, we take Asia range high, we then look to seek Asia range low. Go back again, we take Asia range low, look to seek out Asia range high. And as you can see, what happens here is we take Asia range high, but we don't actually come back to take Asia range low. It's not going to happen every single day, but if you look back over a large sample size, this happens a lot. So again here, what happens, take Asia range high, we take out Asia range low. We take out Asia range high, take out Asia range low. So if you can get into a trade, right, if you can get into a trade up here, for example, and you can ride it down to Asia range low, and this happens, 70 to 80% of the time. Again, we take out Asia range low, take out Asia range high. As you can see, this is a phenomenon that happens pretty much every single day. And if you're jumping in and you're getting involved in the right areas, so sort of up here, you can take it all the way down to Asia range low, or you can target sort of, pretty much whatever you want. So you could target a 1 to 3, 1 to 4, 1 to 5, 1 to 2, target wherever you're comfortable and look to sort of keep a high strike rate. This is one of the best strategies that is around. It's very, very simple, very mechanical. So what we can do is we'll kind of look at some examples right here, right? So what we've got is we've got a take of Asia range low. So we take out Asia range low, and then if we drop down now onto our 5-minute, our entry time frame, what you can see is we do get a market structure shift. So we get a market structure shift right here. So we break above this high, and then with displacement as well, we've got a fair value gap. And if we just mark out our premium and discount, So what we would do is we would take the first proper fair value gap in discount of this displacement range. I've already done a video on, which fair value gap you can use. If you haven't seen that video, I would suggest going to look at it. And it's a very simple way that you can look at taking trades from the correct fair value gap. As you can see, it lines up with a breaker block as well and things like that. But the first fair value gap that I can see, which is in the discount of the range, would be this one right here. And then what we could do is enter on this fair value gap. So once we put entry on this fair value gap, stop below the lows, and then we can look now to target our 1 to 3. So 1 to 3 is kind of around here. As you can see, price does continue. So like I said before, you can target pretty much wherever you're comfortable. If you're only comfortable targeting a 1 to 1, that's absolutely fine. If you're comfortable targeting a 1 to 5, you can also do that, but obviously keep in mind that strike rates will differ depending on when you're targeting. You can just target, some sort of buy side liquidity if you want, and this would sort of give you a 3.17 risk to reward trade. But keep it consistent on when you're targeting, and this strategy will work out over a large sample size. So what we can do, go back to the 15-minute, and if we look at the previous day, so as you can see, this is sort of a Monday, and on the Friday, just before the weekend, what we've got here is we've got another opportunity. As you can see, what happens is we take out Asia range low, look to take out Asia range high. So if we drop down onto our entry time frame, what we've got right is we've got a take of this low. Once we take out Asia range low, we take this low right here, and then we get our market structure shift. Where is our fair value gap that we would be entering from? Our fair value gap is situated right here. So this is the fair value gap we would enter from. Enter on the fair value gap, stop below the lows, and then you could then look to target a 1 to 3 like I said. So 1 to 3 is around here. Again, price does continue a little bit higher, so if you want to try and squeeze out a little bit more risk to reward, that's absolutely down to you, and I would just go ahead, go back in time, go through past price and test this out for yourself. Again, that's another 1 to 3, and then if we go back and look at another example, as you will notice here, we have a big impulse sort of down, and you would expect price to continue. So what we've got is we've got a take of Asia range high. As you can see, this price leg right here is short-lived. It does then come back up and take this high here, and then continues to the downside. But what you will notice is with a 1 to 3, usually you would be in and out of the market before sort of any stop loss is hit. But what you will notice is we take out Asia range high, right? And then we do actually come down and take Asia range low. So if you're targeting Asia range low, that's absolutely fine. If you're targeting just a 1 to 3, you would be in and out before Asia range low is hit. But in this case here, as you can see, Asia range high taken, Asia range low. So if we drop down sort of onto the 5-minute chart, right, our entry time frame, what you will notice is we've got a very subtle market structure shift at the top right here. So Asia range high is taken. We then take this high right here. So we take this high, and then we take this low. We've got a fair value gap, albeit a subtle one, but it doesn't really matter. We've got a fair value gap right here. And then we can enter on the FVG. Stop loss would be very small if you put it on the high. So for me, I would probably keep it, maybe around 5 pips. 5 pips would be sufficient. Obviously, it gives you a lot of breathing room above here. And then what you can do is target a 1 to 3. 1 to 3 is hit quite comfortably. If you want to go break even at some point, I would go through, I want to test it. But overall, what you could do, target 1 to 3, and as you can see, very, very simple stuff. Taking Asia range high, Asia range low is then targeted, Asia range low is then taken, and we are in and out of this trade. So overall, I just wanted to share this strategy with you guys. It's a very simple one. As you can see, if you go back in time, you could go back over, the last sort of 2, 3, 4, 5 years. You will see this happen pretty much every single day. Asia range high taken, Asia range low taken, Asia range low taken, Asia range high taken, Asia range low taken, Asia range high taken. It happens pretty much all the time. Right here, it takes Asia range low, but it doesn't take Asia range high. And as I've said before, it won't happen every single day. But if you go back and look again, the previous day, Asia range low, Asia range high, Asia range low, and then eventually Asia range high is taken. So it does happen, pretty much all the time. It's a very simple strategy to follow, and if you're entering at high probability areas and you're following your trade plan over a large sample size, you will be, wildly profitable with this strategy. So it's just that simple, guys. If this video did help you out, please leave a like on today's video. If you have any questions, feel free to leave them in the comments. And without further ado, guys, thank you very much for watching, and I will see you in the next one.